Hey, good evening, everyone. Thank you, everyone who has just joined us. I think we're very glad to have Peter Pak from BOCI Securities back here again. I think previously we had a lot of insights from him on the Hong Kong market outlook. Now that we are in the second half, as we all know, I think recently China has been saying that they will have a stimulus, long-awaited stimulus, and the recovery has been somehow patchy. I think not as strong as this, but I think things are looking better going over. So let's hear from Peter. What shall we expect? And also we know that the FOMC meeting will be coming up, the rate hike. And over to you, Peter. Thank you so much.
Okay, thank you, Vincent. Good evening, everyone. Well, time passed fast, and I think it's been like 3 months something since we were here last time. Where unfortunately the Hong Kong market hasn't moved a whole lot during the past like 3 months, but going forward, I checked out some of the research reports we just published recently. It seems that things are looking more positive. So hopefully yesterday's rally is just a good start, and the second half we are going to see more positive results. Okay, so tonight, just as usual, I've gathered some of our house views, including in the macroeconomic side or the sectors, different sectors, and just try to share with you guys. Well, first of all, and just a summary or an overview. Well, just as I mentioned before, the Hong Kong market is having a lousy first half, I would say. It fell, obviously, it fell behind most of the other stock markets in the region or globally. However, I think valuation remains very attractive at the moment. And also, as I mentioned just shortly before that, we see a few major catalysts which may help to just boost the market going forward. In China, it seems that the economic growth is having a little bit trouble, I would say. Just first quarter was good, but second quarter, some of the indicators just slow down. And as the recent high-level meeting indicated that the government is going to push some, say, policies or further stimulating measures, trying to, or at least to maintain some momentum going into the second half. And FOMC meeting is going to conclude tonight, and most analysts is saying that this may be the last time of the rate hike. We shall see, but nevertheless, it's been over a year for the rate hike, and it has caused some problem to the U.S. financial system as well as the economy. Although some statistics show that the economy is still okay, still doing okay. I think we are not going to see any rate cut in the near term. That's for sure. But by the same token, this rate hike is pretty much towards the end. So that's the one of the big factors, I would say. Well, just a few charts or tables to show some of the points I mentioned before. First of all, the U.S. inflation. Well, obviously the inflation is going down, so that's a very good side. That's a positive side. But however, if you look at the Federal Reserve, they were talking about 2% as the benchmark, which is quite far away from the current level. We do expect the U.S. inflation to go down or to fall gradually, but in the near term, we're not going to see the 2%. So that's still a long way to go. Another thing we think still is worth watching is the U.S. banking system. Okay, a few months ago, you had a big trouble when the Silicon Valley Bank went bankrupt. It seems that the incident is pretty much over, but obviously many institutions still may have liquidity issue. Also, the commercial real estate loans, those are the two factors may still causing trouble to not all the major banks, but maybe some smaller banks. So we think that's worth watching. Obviously, the side effect from the rate hike during the past 12 months or so, where that has caused lots of problems to smaller banks such as the SVB or some other smaller regional banks. So we'll see. Okay, let's move to China. As I mentioned before, it had a pretty strong first quarter, on the back of those recovery from the COVID-19. However, when you moved into the second quarter, some leading indicators already showed that there are some weak sides, such as the PMI. Where both manufacturing and service PMI, they have shown some weakened size in recent months. From as you can see from this chart. And also another problem, which is can be quite trouble or dangerous, is that the youth unemployment rate. Official statistics show that is above 20%, which is quite high considering in the usual or normal standard. Normally, China is like maybe 8 or 10%, but in recent couple of years, it has been keep rising for quite a long time. And this year, more than 11 million fresh graduates just were graduated from the college in China, and many of them are still looking for a job. And so many people say that the current economy simply cannot absorb such large amount of new labor force. So that's a trouble. But of course, I mean the government is putting lots of efforts to trying to resolve the problem. And also they are calling the internet companies or those large corporations try to employ more young people. Hopefully it will work, but nevertheless, where it seems that you will probably maintain at a relatively high level for a little while. We'll see. Okay, this table, I just cut it from one of our recent economic research reports. It's just the quarterly economic indicators of China. I'm not going to to go through every single figure, but the thing is that you can see some parts or sectors were particularly strong, such as the say service sector and the consumption, retail sales as well. So that's the bright spot, I would say. But on the other hand, some other areas are not doing well. For example, the property investment, they keep falling for quite a long time, and it dragged down the whole economic growth by a portion. And also another weakness comes from the import and export. So that's the trading activities. That where China has been relying on those export for quite a long time. It's been performing quite well, but this year it looks like the momentum is just not as strong. Lots of reasons. Where some analysts saying that the U.S.-China tension over the recent years is one of the major reasons. probably, and also the weak demand in Europe, in the US, as well as some other countries also. So that's worth worrying. And it seems that the government is saying that well, this is difficult to turn around in the near term because too many factors are out of control, I would say. So maybe this year the trading activities, especially in the second half, will see some weaker figures later on. So that's why the recent high-level meeting, emphasize more on the consumption part. So this the domestic consumption or retail sales instead of the say property investment or the those exports. Okay, let's move on a bit. This is the first half performance of selected indices. As you can see, the first half was very good for a few stock indices, and especially for Nasdaq. It actually went up like more than 30%. And one of the surprise stars, I would say, it goes to Tokyo. I mean, the Japanese stock market has been mediocre for quite a long time, but this year it was one of the star performers. As you can see, the Nikkei index went up more than 25% in 6 months. Obviously, Hong Kong is not doing well. I mean, compared to those guys, is where you just fell far behind. And the Hang Seng Index fell like 4%, so it's not really a huge fall. But if you consider, I mean, last year it fell like 15%, and also it was the third consecutive negative year. So if you add that together, Hong Kong market has been quite weak and for quite a long time. And I mean, one of the comparable markets is Singapore. Singapore wasn't doing well, but I mean, the Straits Times fell like 1% something, still slightly better than Hong Kong, but comparatively speaking to other markets, is also not a very good performer. So hopefully the second half can at least pick up some steam and recover all these losses. In terms of valuation, we also did some research on that compared to all the different indexes. As you can see, the Hang Seng Index, so that's the so-called blue chips in the Hong Kong stock market, is one of the cheapest one in terms of this PE ratio. Basically, I mean, you fell far behind all other or most of the other markets, including the European, the US market, as well as some emerging markets as well. And also, if compared to the historical average, also at the moment, Hong Kong market is just trading discount. So that's that's a sign that we're just really underperformed. But as I said, hopefully where we can recover some of the earlier losses going forward. So that's the evaluation. And as I just mentioned before, the US market has been doing really well. Nasdaq has been doing really well. I mean, even the Dow Jones has been very strong just recently. If you compare the US market in terms of valuation, Hong Kong is just simply very, very low. We take the Standard & Poor's S&P 500 index. So if you compare to the main board, the average PE, the average PE ratio, the standard S&P 500 is trading like 1.2 times, above the Hong Kong market. So that means, let's say if the P ratio for the Hong Kong main board is like 10 times, so the S&P 500 is around 22 times. So as you can see, the gap is huge. It's really, really bad. Historically speaking, I mean, the US market may be trading at premium, but right now the premium is simply very large, unusually large, I would say. Okay, I think the last time I also showed a similar slide on this. This is like the 5 major investment drivers. Where most of the institutional investors they may be just using these 5 indicators as the benchmark or so-called investment drivers. The first one is earnings growth. Second one, valuation. Third one, dividend yield. So like the dividend income, stuff like that. The fourth one is industrial cycle. And the last one, or the fifth one, is concepts. We pretty much tracked down, from these 5 different factors, and we found that many of them are, very, at the moment is very positive for the Hong Kong stock market. Earnings growth maybe is not exactly at the best status. But valuation and dividend yield, definitely. I mean, valuation I've talked about a lot, so maybe not to repeat here. But dividend yield was kind of similar because like the valuation is low and the dividend remains the same, so the yield must be high, or the dividend return. We are talking about on average now is almost like 4% dividend yield, which is quite high. Many heavyweight stocks in trading in the Hong Kong market, they are carrying like a 6 to 8% dividend yield for the full year. So that's quite attractive in terms of the yield. And besides that, the industrial cycle or concepts also, pretty much on the solid side, if not exactly, at the best position. So on the average, we think, many institutional investors they have beat that the Hong Kong stock market right now is quite attractive, or just in the long term it should have a certain return. Okay, here's the list for the major, I would say, catalysts for the Hong Kong stock market at the moment. First of all, the U.S. rate hike. We'll see, or just maybe a few hours from now, the results, and also what's the Federal Reserve officials is going to say. But I think the consensus of the market is pretty much like the interest rate hike will end soon, and even this is likely the very last time we are going to see the rate hike. Although maybe not majority, but some analysts saying that okay, July a quarter of a percentage, and then the September they're going to suspend, just not moving around. Maybe going forward to the fourth quarter, there's another rate hike, but that will be the very last time. So some analysts are saying that maybe we shall see until like November. But right now, I think that represents only a small percentage of the viewpoint. So it's not really a mainstream. Most of the analysts at Wall Street, they are expecting the end of July. So tomorrow we are going to see that's the very last the last time of the rate hike. So that's a major catalyst. Obviously, I mean, you would change lots of things, to say fund flow, or you need these the weighting of different sectors, things like that. And the second thing is the so-called stimulating package from the Chinese government to boost the economic growth. Just a couple of days ago, the high-level political bureau, they held a meeting and discussing the some of the measures or policies going forward. Although I mean there are no concrete or details at the moment, but I think most people are saying that we are going to see, or bit by bit, in the maybe upcoming weeks, which you will cover different sectors and also from different parts of the country. Because, well, say for the property side, maybe some local governments, they're also doing something as well as from the commercial banks as well. And for different sectors, maybe say the electrical appliances, and also you may be covering the new energy cars, things like that. So we'll see. But obviously, I mean we saw a strong rally in Hong Kong market just yesterday. The turnover jumped quite a lot, also on the back of the strong buying. So that's a good sign, and it seems that even today there's some retreat, but the percentage is just a little bit. So looks like the momentum it is still going on. Hopefully this we will see the rally to continue in the month of July, as well as next month, so the August. Another thing is that it's also related to the policies in China, which is targeting those new economy companies such as Tencent, Alibaba, Meituan, all these guys. We are going to see a diminishing regulatory risk, which means that the Chinese government may just lose a bit on the control, or the monitoring, on all these high tech companies. It's been like 2 or 3 years for the ongoing regulatory reform, the government actually has fined quite a huge amount, include to Tencent or Alibaba or other companies as well. We are talking about billions of RMB. But most people are saying that there are signs, just show that this is going to end. And also recent speech from, say, the top officials from China, including Premier Li Qiang, and he also mentioned that the new economy, or the internet economy, is very useful, very important to China, and the Chinese government is very positive on the development or future development of this the whole sector or industry. So that's a good sign. Another thing is that the financial crisis of the those Chinese property developers there are signs of easing, if not completely resolved. Well, just early on, one of the largest private developers, which is the China Evergrande. well, the stock has been suspend trading for like the 2 years something, but it actually released like the annual earnings reports, and well, on paper it lost like 500 billion RMB over the past last 2 years. So that's a huge amount. But also on the other side, they're talking to the creditors. Just we're trying to resolve some of the the debts or the let's say bond all these things. And also there are reports saying that some local governments in China, they're doing something, try to ease all these pressures on the developers, and as well as with the some help from major commercial banks. So well, we'll see. I mean, if well, personally, I mean, I don't expect the whole sector, just to come back really strong in the near term. But at least probably the worst is over, and yeah, and the government may try to do something at least. I mean, to boost up some of the demands from buyers or confidence, from the buyers, because after all, I mean, the property sector is very, very important, not only to the economic growth or consumption, but also to employment, and as well as the local government finance. So all these are linked together. So if you want the economy to stay strong, or to pick up some strength, property sector probably you would need to boost it a little bit. And there are a few other factors which is just possible, or maybe some have some chances to become a catalyst. First of all, the soft landing of the U.S. economy. Well, a few months ago, most analysts saying that the U.S. economy is heading to a recession, at least a mild recession, and they were talking about like second quarter of this year. So right now we are in, already past the second quarter, and we didn't see any signs of recession. So that's one of the positive sides, or better than expected. Going forward, where people are still arguing that when we're going to see a recession or not. Nevertheless, our economists saying that there's certain chance, if not a huge chance, at least maybe 30 or 40% that the U.S. economy is actually heading to a soft landing, which is a very, very nice thing. So even after the rate hike, the U.S. economy remain growing, only at a slower pace. So, meanwhile, the inflation keep falling. So that's one of the best things, or at least the Federal Reserve really love to see. And also another thing from the U.S., if the Federal Reserve actually cut the rate earlier than expected. Just I mentioned before that in the near term, probably we are not going to see the rate cut. So the high interest rate will stay at its current status maybe for at least a few months or so. From the past, this is quite normal. Before just turn the rate to another direction again. But this time we'll see, because this many people are saying that the Federal Reserve needs to play a balance. So to fight the inflation. In order to fight, we have to keep the interest rate high. But on the other hand, as I mentioned before, the financial system, maybe as for some of the smaller banks, or commercial real estate loans, stuff like that, So, if you look at that part, you don't want to keep the interest rate for high for too long. So that's what they really have to play a nice balance or very carefully. The third thing is that the China-U.S. relationship, if you improve somewhat, so that's a good sign. Especially, I think Hong Kong is quite sensitive to the U.S.-China relationship. I mean, since Donald Trump became the president, it's been quite pretty bad. And even Joe Biden replaced Donald Trump, but the relationship hasn't seen any improvement, even got worse to a certain extent. But some of the recent developments show that maybe there are signs that both countries want to talk, to sit down to talk. Instead of the competition or even other conflicts, things like that. So if that's if it turns to a more solid form, and I think that's that can become one of the catalysts or major catalysts for the Hong Kong stock market as well. So hopefully, yeah, we are going to see that in the near term. Okay, the U.S. Interest rate hike. One of the things it will change is the fund flow of the emerging market or even globally. In here I track the U.S. dollar index movement, so it reflects the strength of the U.S. dollar versus a basket of other currencies. As you can see, the market expectation has turned to the end of the rate hike, and then the U.S. dollar index fell quite sharply just recently. So by the same token, renminbi becomes stronger, as well as some other currencies. So that's a good sign, especially the appreciation of renminbi. That really helps the Hong Kong market. As you guys would know, many of the assets, asset base on renminbi, say those property stocks or banking stocks, or those things. But the share price is in the Hong Kong dollar. So if renminbi appreciates, theoretically speaking, the share price should go up a little bit, just in terms of the currency for foreign exchange adjustment. And also, not only to Hong Kong, so the whole emerging market as well. This will have, if the U.S. dollar continue to weaken, this will have like a massive effects to the global fund flow. And from the past, we will see the emerging markets usually benefit from this hot money flow. They flow from the U.S. dollar to other countries or areas. Okay, there are a few sectors which I'm going to talk about or mention at this time. First of all, commercial banks. Well, according to our analyst forecast, major commercial banks, say the earnings or the revenue may slow down a little bit. Just amidst the COVID-19 pandemic, and also the ongoing trouble from the property market in China. But we expect the situation to improve gradually, say next year. So this year, well, it's not really a bright year, but as I circled, say the net profit growth, the non-performing loan ratio, and also the core tier 1 CAR ratio, capital adequacy ratio, they all will improve in next year. So 2024, we are going to see a more significant improvement on the fundamental factors for these major Chinese commercial banks. Right now, the valuation for these banks are very cheap. We're talking about like 4 times, the PE ratio. The price to book is deep discount. Normally is like a 0.4, so it's like 60% discount, and the dividend yield is like 7 to 9%. So it's really cheap. And the liquidity is good because their market cap is huge. Say ICBC, CCB, BOCI, ABC, all these big state-owned banks. Okay, this chart shows the another sector. This is the internet or sector. As I just mentioned before, that the market is expecting an easier environment regulated on regulations, and some recent major signs from authorities already are showing that. So that's quite positive, and as I said, I mean the internet sector is really important. It's one of the bright sparks in recent years, and it's very well. Not only it creates lots of revenues and also lots of new jobs to the young people. So that's quite important. And China's internet market is huge. The penetration rate has been rising steadily. Right now in the urban area, it's almost 90%. So pretty much all the people they have internet access. In the rural area, maybe 60 to 70%. But considering the population base, that's pretty high. And also the people are using more and more on the those internet banking or the e-commerce shopping, things like that. And we are talking about actively maybe almost 1 billion people. They buy things regularly, from the internet in China. So that's a huge market. And I remember last time I also showed you at like a table, some of the, those figures on the continuous active members or users for say Tencent, Alibaba, or JD.com or Meituan, all these bigger guys. We are talking about somewhere from 600 million to over 1 billion people. So that's in China only. So that's yes, you can see the market size is huge. And the upcoming interim result, we'll tell that in the first half, some of the companies are still growing at a double-digit figure. So that's where I think that's a good sign. Okay, another sector we have been actively just watching is the new energy cars or new energy automobile industry. Obviously, I mean that's is something really is growing fast. Statistics show that in the first 5 months alone, I mean, China has sold almost 3 million vehicles. I mean, new energy vehicles, and that's like representing like 40% growth year on year. So it's really growing at a high speed. For the whole year, I think the government has set a target of 9 million new energy vehicles, and our analysts believe that's achievable or definitely doable. So that means for the whole year, it's still growing like like almost 40% at the year on year. And well, right now, China has become the largest new energy vehicle producers in China, in the world. And also, we see a huge investment on the infrastructure. Let's say these charging facilities, other, hardware or software for these new energy cars as well. So that's quite aggressive, I would say, because even in Hong Kong, I mean, I don't see that many, say, charging facilities are, I mean, compared to, say, the mainland China. Definitely, I mean, Hong Kong is more maybe conservative, and also the government is not putting, huge investments on that. But instead, I mean, China is doing that. So, and also on the political side, the Chinese government is pushing those tax breaks for new energy new energy cars. So people, when you buy it, you will save more money, things like that. So just encourage more people to buy, say, electrical cars or things like that. Okay, the last page actually shows the just another statistics that not only China has China produces more new energy cars compared to other countries in the world. It exports the most new energy cars. I mean, compared to other countries. You have actually overtaken Japan as the world's largest car exporter in recent months. As you can see, the blue circle I show you guys. This is quite significant because Japan has been the top auto exporter for many years, probably 20-30 years. It's been a really long time, but just in recent months, China has topped Japan. There are some exception, though. Maybe situation is because China exports the cars to Russia. Instead, I mean, all other countries cannot export or they don't export cars to Russia, but on the other hand, I mean, Russia only represents a little bit. I mean, it's not a really huge amount of cars, so that's not the only reason or the overwhelming reason which pushes China to become the top auto exporter. At the same time, or the technical improvement, especially, China has the advantage in say those battery, those or other equipments related to the new energy cars. So that may be the more major reason to help China to beat Japan or other countries in terms of this new energy auto market globally. So they're saying that the new energy cars, the car battery plus the all these solar energy equipments, or is three of the major new products which China tops the world in terms of export. So that actually provides certain momentum to China's trade activities going forward. So we'll see. But nevertheless, we think guys like BYD, all these automobile producers, they are going to do well in the upcoming months or even next year. So one of the brightest sectors, I would say, in the Hong Kong stock market is the new energy cars. Okay, I think that's pretty much my presentation for tonight. So we'll leave some time. We can just discuss or talk a little bit. Thank you. Thank you.
All right. Thank you, Peter.
Yep.
Nicely spoken presentation. Much insights and details as well.
Thank you. Thank you.
Let's see how things be better in the second half. I think, as we all know, I think a rate hike is coming to an end, as we all know. US market is doing quite well as well. It's been holding up. I think China, with the stimulus support coming, I think things will be looking a lot better.
Yep.
Okay. And also, let me make some announcements. Basically, for those who have joined, I think tonight there will be a feedback form that's just been posted. Do get back to us on your feedback so that we can continuously improve on our delivery of the webinars from Hong Kong and other webinars as well. Return it to us before 12. You will be getting 1288 points, RT points, for you to trade more. Buy Hong Kong shares. I think it's quite cheap as of now. I think a good entry point. I was discussing with Peter just now before the webinar. Okay. Let's see some discussion asking about Alibaba and the IPOs and the restructuring going on. Could you share a bit more how attractive are those? I think there's a question from there.
Okay, yeah. The ends, they pay a fine just like 2 weeks ago, and it marks the end of the so-called investigation. And right now, I think they already just kickstart a restructuring. So they are going to get the license again, because previously the government saying that the business model was were no good or not properly fit into the regulations, things like that. And so they are going to do a restructuring. They are going to reshuffle some of the different parts of the business. I think we are not going to see the IPO from the ends. Probably not this year. Maybe next year or even later. So probably 12 months from now or even longer, because this restructuring, I think, is quite complicated. It takes time, and also the valuation obviously cannot compare to the previous the first time when they launched the IPO, where it's going to fall quite large. But by the same token, I think obviously it means that the whole investigation, not only for Ant but for the whole Alibaba group, has come to an end. So that's a good very positive side. And Alibaba is also doing lots of restructuring, and is going to list at least like 6 different entities were to the Hong Kong stock market. And right now, I think the logistics arm, which called Cainiao, where they are talking about that maybe say late this year or early next year. That's a large size IPO. And also there's another consumer food and beverage entity they're going to list from, also like a spin-off from Alibaba. So that will provide some positive size to Ali as well. I think we are quite positive because if you look at the share price of Ali right now, it's like 90 something or just above $90. And most of the target price is set by the brokerage houses, including us, as like way above 100, maybe 120 or 130. So still quite some upside. Yeah.
Yeah, there's a question asking, is China in a deflation stage?
Well, the inflation is very low. That's true. But according to our analysts saying that probably we will remain quite low for a little while, and then it actually may go up a little bit instead of go down. So in that situation, we are not going to see like a deflation, not really. Especially you see going to the second half when the stimulating policies really push out. Supposedly just or increase the demand for consumption, or all these things. Hopefully, you will jack up the price by a little bit, but not we are not going to see the deflation. Yeah.
A question from Kenny here. I think he's asking about what is the impact of the property owners defaulting on their loan installment in China? Is there a huge impact, or is there a risk?
Well, if the scale of this defaulting is becomes very large, of course, it will cause problems to the commercial banks. But right now the percentage is quite low. I think early on, some of the investment banks they wrote reports on the certain banks that say that the potential risks, things like that. But the Chinese banks are denying all these figures. Or at least from on paper, it seems that the ratio is very low, it's manageable. And I think the local governments plus the commercial banks, they are doing something, at least trying to avoid such things to happen at a rapid pace or on a massive scale. So I mean, in the near term, we do not see like a potential risk from that.
It's quite reassuring. Good to hear that. Okay, I think as you know, I think from a slide, I think EV is so hot. I think China is moving ahead. In fact, I think one of the very advanced in terms of their EV cars. So the question here: which of the EV manufacturers would you suggest we look into? You got BYD, you got Li Auto, you got a few. Which are your favorites, son?
Well, yeah, I checked our research reports. I think we still like BYD. Well, I mean, obviously BYD is more is by far the largest in terms of say the capacity, also the whole production chain, things like that. And also in terms of technical, these issues, also they are more advanced compared to the other smaller guys. So even Warren Buffett keeps selling where the stock's too bad, but we still like BYD. We think you will maintain its leading position maybe for quite a while. Other guys is catching up, but they cannot just overtake BYD in the near term.
You have a question here asking, what do you think the HSI index range for this quarter and this year?
Okay, well, that's a tough one. Well, if you take a reference, I mean, this year, I think it's the start of the year in January, we saw the HSI actually hit like 22,700, and that actually was the high point, at least so far this year. So I would say, that's a sort of a reference. If by the end of this year we can catch up, say 22,000 something, or even around 23,000, so that's really a huge relief. But of course, I mean, it's not easy. I mean, it's still a long way to go. But on the other hand, I mean, we are quite confident that or the HSI is probably unlikely to fall like below the 18,000 mark. So we are like currently we are 19,000 something, but it's like more upside than downside if you look at that.
Yeah, and also I think the US-China ties have warmed a little with Yellen,
Yeah.
Blinken, Kissinger has just over there. So yes, somehow eased the tension. So things are looking even better. What do you think of the upcoming Hua Hong chip IPO, second largest one to be soon to be listed? What is your view on that?
Mm, well, supposedly the market is quite positive, I would say. I mean, it's technology sector. It's one of the largest chip makers in China, and obviously, I mean the chip industry is well, it's quite difficult. I mean, globally, I mean the US is really cutting everything, just shutting down all the ties to China. And early on, the CEOs from Intel or Qualcomm, things, other big companies, they try to they went to Washington D.C. and just try to talk. We'll see, all these negotiations, how they turn out. But I think China is also trying very hard to catch up a little bit. They know they are going to have a difficult time going forward, but they are also investing a huge amount of money into it, such a technology. Hope that at least they can catch up a bit. Yep.
He's saying this question asking, commenting basically so-called the current bull market on US, the AI and tech stocks. Doesn't seem to be on Hang Seng. What are your thoughts on that? Is there a good time to look at it now? I think.
Yep. Yeah, certainly. I mean, the AI is, since the ChatGPT launch, and it caused like a huge wave, especially in the US, and the Nasdaq obviously went up, like crazy. But unfortunately, not for the Hong Kong stock market. I mean, many institutional investors, especially those from the US, they are still cautious to the whole Hong Kong stock market. So that's maybe one of the reasons. But in terms of AI, I think many Chinese governments, Chinese companies, they are also putting some research. I mean, Baidu is one of these, maybe one of the earliest guys trying to release something. And also currently Ali or Tencent, they are also doing similar research. And some of reporting say that some reports say that they are going to maybe to launch similar products within the next few months.
Yeah, I think there's one question asking what is the best sector to invest in Hong Kong market. I think he typed in Mandarin, so I think I'll just translate that. I think that's what he's meant. What is the best sector to invest in Hong Kong?
Best sector. Well, in terms of growth, I mean, just like I mentioned before, one of the is the new energy cars. If you want to play safe, that's a different story. I mean, commercial, those commercial banks may be boring, but quite in terms of defensiveness, it's quite strong. And if you hold your whole year, you receive quite a hefty dividend. Also the telecommunication sector as well. Similar situation, cheap valuation, high dividend yield, and solid business. Things were quite kind of similar to the Chinese commercial banks. Yeah.
Yeah, but I noticed the banks and the telco, China Telecom and all those, I think the yield and the banks are very, very good. It's like unbelievably good. So I think those are very stable one. I think the more exciting, like you mentioned, the regulatory clampdown is over. So your internet of space, your tech, your EV, those a bit more high return, high risk, so called. I think yeah. So
the volatility is high. Yeah, that's certainly. I mean, it's different types of sectors. Yeah.
Okay, I think that's I think someone asking about specifically on Hang Seng Bank. It doesn't seem to move like the other ICBC and stuff like that. Yeah, could you comment on that?
Hang Seng Bank, well, is one of the largest local commercial banks. So they're pretty much in Hong Kong. They have a long history. They are a subsidiary of HSBC Group, but very strong connection in the Hong Kong itself. But other than Hong Kong, I mean, not much exposure, including China. They have branches in China, but it's not really a big need. I think the fundamentals are still fine. I mean, the Hang Seng Bank has been managed quite cautiously. And it doesn't take lots of risk in terms of doing business. So it's more conservative side. But one of the things that I said, its dividend yield is not really too high at the moment. I mean, it used to be like 5-6%, but right now maybe 4 to 5%. So it's much lower than some other banks. Even HSBC has a higher dividend yield than Hang Seng. So that's why it seems that some investors currently they don't really like Hang Seng. Yeah, and the valuation Hang Seng is, relatively speaking, is higher than many other banks.
Yeah, Hang Seng mainly Hong Kong domestic, whereas the other ICBC and all are more global. Yeah, so that's and also the lower yield. I think given a choice, I think it's better to stick with the ICBCs and the
Yep.
Okay, I think that's about the time that we have and the questions we have answered. I think. Thank you so much, Peter. I think very good.
Thank you.
Very good.
Wish everyone good luck. Yeah.
Yeah. Thank you.
Thank you.
Thank you, everyone.
Yeah. See you next time.
See you
guys.
next time.